Bimal Jain, none other than CA Bimal Jain. We are here with a webinar on GST Amendments. And it's been a long due. We have been waiting for this webinar, but we were waiting that all the amendments, we wanted to cover a vast topics so that you don't miss on anything. And we were there for you with our GST certification course. And now we are here with the amendments so that you don't miss on anything. So here we are. I leave you guys with Bimal sir, and you can ask your questions in the chat box. I will read them up, and in the meantime, all the amendments he'll be covering us through, and he'll be walking us through. And keep on asking your questions, and I'll read those questions out in between the webinar. We are here for a couple of hours, so let's try to make best out of it. Yeah. Yeah. Over to you, Bimalji. Thank you for this.
Thank you. Once again, welcome to all of you, those who are registered participants of e-certification course on GST. This webinar is important from two aspects. The first aspect, today we are going to cover all amendments, whatever has happened since the day you bought this e-certification course. So maybe you are having thought process in your mind that we have taken this e-certification course of GST. It is not amended one. Rest assured, till the time this course is live on CA Club India, you will get all amendment. And that is the surety I am giving to each one of you. Rest assured about that. Rest assured about that. Having said that, now today we are going to cover all the amendment. Whatever has happened in CGST Act, IGST Act, UTGST Act, Compensation Cess Act. And then I'm going to touch base provision pertaining to TDS, tax deducted at source, or tax collected at source under section 51 and section 52 of CGST Act 2017, effective from 1st of October 2018. Having said that, we are going to take your queries also, live queries today. So whatever queries we are getting today, we will take your queries and try to respond back. But that is not the end of the story today. With this, we will take it forward how to file GSTR 9, which is annual return, and how to file GSTR 9C, which is GST audit. Maybe you all would be interested, and those who are looking for this course, they would be given course content and this webinar recording to you so that you can run through later part and really equip yourself, prepare yourself for these amendments, taking forward TDS and TCS, and then followed by GSTR 9 and 9C. Let's start with the GST amendment has happened as on date. Look at the first and important aspect. You must be knowing during the monsoon session, lot many amendments are being proposed in CGST Act. And now these amendments are being passed, and Honorable President of the country has given assent to all these amendments on 29th August 2018. And for your information, all these amendments are being gazetted. Publication has happened in Gazette of India on 30th August 2018. But there are certain sections yet to be notified. So now we got CGST Amendment Act 2018. We got IGST Act Amendment Act 2018. We got UTGST Amendment Act 2018, and we got Compensation Cess Amendment Act 2018. Now, what is the impact of this amendment? As on date, these are amended from central perspective. So what happened? Whether all 31 states, including 2 union territories having status of state like Delhi and Puducherry, all the state has to pass respective state SGST Amendment Act 2018. And once these are being passed, then it is going to be notified for both act perspective, from central perspective and from state perspective. Now, what are those amendments? how it is impacting our GST provision, and what is the implication. While doing amendment class, I'm going to discuss number of points which I would request you must be having some pen, paper ready, and you'll be taking a note of those provisions while taking down my deliberation. And then if you're having any query, you're free to post your queries on chat box available to you. At the end of the session, I will definitely try to take up those queries. Let's start with the first and foremost. So when I'm starting, the first point for all of you, what is a taxable event in GST? I can't see you, but I want that each one of you in your mindset start responding back to me. What is the taxable event in GST? We all know supply. Supply of goods or supply of services. The term supply is being defined under which section? Section 7 of CGST Act 2017. Having said that, there are three important amendments proposed in section 7. What are those? The first and foremost, you would be knowing that three schedules in GST. Schedule 1 talks about certain transactions which are without consideration, even GST applicable, and there are 4 specific entries. Schedule 2 talks about classification. A transaction can either be supply of goods or supply of services. And Schedule 3 talks about certain transaction which is neither a supply of goods nor supply of services. Let's look at the first and foremost one. Reference of Schedule 2 is being deleted, and that too retrospectively, meaning thereby from 1st July 2017. From the definition of supply, meaning thereby Schedule 2 has no reference unless it is supply. Under section 7, subsection 1, clause A, clause B, clause C. So what is the relevance of Schedule 2 now? Relevance of Schedule 2 would be only to determine a transaction can either be supply of goods or supply of services. But for chargeability, it has to be supply. And this supply must satisfy the 4 corners of provision which is given under section 7, subsection 1, clause A, clause B, clause C. So if you are taking down, what would be the note? Now Schedule 2 will have no importance from supply perspective. It is only to determine. So you can say Schedule 2 is nothing but a classification. Classification schedule. A transaction can either be supply of goods or supply of services. Unless these transactions are supply, GST not leviable. Schedule 2. Item number 2 now. And here I am going to have test also, because I know you all are paid participants. You have run my GST course and you have become GST practitioners. So this amendment class will not go one-sided. I'm watching each one of you now. So tell me when I say 7.1b, I'm sure I can't see you, but we carry the synergy of connecting together. So maybe when I'm posting query, you must respond back from your side so that we come on the same page and start really understanding the provision which I'm discussing today. 7.1b of CGST Act 2017. What it says, import of services, right? With consideration whether or not in the course or furtherance of business. Meaning thereby 7.1b was very specific. When you import services and there is a consideration paid, whether or not in the course or furtherance of business, even though it is personal, no relevance to business, GST leviable, but there has to be consideration. Now, when you read this same 7.1b with entry 4 of Schedule 1, and Schedule 1 is what? Schedule 1 has got 4 specific entry. Even though without consideration, GST leviable. Am I right? What was entry 4? Quick, recollect if it is coming to your mind. Entry was import of services by a taxable person from a related person or any of which other establishment outside India in the course of furtherance of business. Am I right? Now the relevance of taxable got deleted. So the word taxable got deleted. Meaning thereby, now what is the provision? So entry 4, Schedule 1 now read as import of services by a person. Even though you are not registered, this provision going to be applicable. So when you import services from a related person or any of which other establishment outside India, even without consideration, GST leviable, but it must be in the course of furtherance of business. So this is the second change in supply. Coming to the third important change. And here we'll go with a case study. I want each one of you should apply your mind thoroughly. And then I will say what is the amendment definition of supply. Listen, you are registered in India. You are registered in India. So you are a taxable person. Now let's say you are getting an order from your client or customer in US. So he wanted certain supply of goods from you. You are registered in India. Now instead you supply from India. You got supplier in China. And this supplier is supplying goods to your customer in US. So supply is happening from China to US. But revenue will come to your account, in your PL account, in India. Now tell me, with a GST leviable. Please tell me. So there are two ways to look at this transaction. Custom duty can be levied only when I am importing goods. So in this case, supplier is directly supplying from China to US. He is not supplying to India, then from India it is going to China, US. So now we have to really determine the supply which is happening directly from China to US with a GST leviable. Second could be that when you are raising invoice to your customer in the US, you are being paid in convertible foreign exchange. Am I right? Convertible foreign exchange. Whether it is going to be export of goods. Now, this transaction is being prescribed in Schedule 3 item. And what is Schedule 3? Immediately to recall, Schedule 3 says it is neither a supply of goods nor supply of services. So this particular transaction which I am referring to, it is called merchant trading. Third country merchant trading, meaning thereby even though revenue coming to PL account, profit and loss account, credit side, but GST not leviable. Second transaction, high C sale. What is high C sale? Please tell me. Let's say I'm importing goods from Korea. I'm a registered taxable person in India. I'm importing goods from Korea, let's say at $100. Before goods move custom frontier of India, when my goods is on high seas, I'm selling these goods to say B. So A is importing at $100. Before goods crosses custom frontier of India, A is selling to B at $150. Now, in my books, there is $150 turnover coming to PL account credit side. Question comes, with a GST labelable in the hands of A, this is the transaction. Now this is being prescribed in Schedule 3. It is neither a supply of goods nor supply of services. So what happened? GST not leviable even though it is coming in credit side of PL account. So who will pay custom duty? In this case, B, who is ultimately purchasing goods while on high siege, they will file the bill of entry and will pay custom duty as applicable. So what are the duty leviable today when you import goods? Any idea? If you can recollect, assessable value 100 rupees, basic custom duty 10%, social welfare surcharge 10% to be calculated on basic custom duty 10%, so effectively 1 rupee. So it becomes 111 rupees. Now IGST leviable. So rate may be applied 5, 12, 18, 28 as applicable on that specified goods. Let's say 18% leviable, then 18% to be levied on what value? 100 or 111 inclusive of basic custom duty and social welfare surcharge. It is applicable on 111 inclusive of basic custom duty and social welfare surcharge. Why? Under this section, this provision is given. Why I'm asking all these questions to all of you? Just to make sure that you have really run through this GST course in a right perspective. Section 15 of CGST Act 2017 clearly says the value, taxable value, would be inclusive of all other taxes and duties for chargeability of GST. Hence, thereby, IGST leviable on value inclusive of basic custom duty and social welfare surcharge, which is to be paid by B, not by A, because goods are being sold before it crosses custom frontier of India. Having said that, it is coming on credit side of PL account of A, still GST not leviable. Now the entry specified in Schedule 3, the third transaction. Let's say I'm importing goods at $100. I've imported the goods, but I've warehoused the goods in custom bonded warehouse. So I've not filed my bill of entry for home consumption. It is only inbound bill of entry is being filed for warehousing of goods in custom bonded warehouse at $100. While my goods are bonded, custom bonded warehouse, I'm selling these goods to B. So A is selling to B, let's say at $150. Now B is ultimately going to file bill of entry for home consumption. Then in this case, A, who imported, warehoused the goods in custom bonded warehouse, but not clearing for home consumption, selling at $150 and purchase cost was $100. $150 will be my revenue coming on credit side of PL account. GST leviable. This is the question. Answer H, big no, GST not leviable. This transaction is being specified in Schedule 3, meaning thereby it is neither a supply of goods nor supply of services. So no GST leviable. So these three transactions, I recap once again: merchant trading, third country sell, high seas sell, inbound sell. And I'm sure you must have got these summary papers which we have prepared and given to all the registered participants or those who are willing to really go for registration of this GST course. And these documents are being prepared which you may run through later while seeing this video, which would be recorded and later on would be available as a part and content of course material for you. And these material going to help you for your better understanding. So all these three transactions, schedule 3 now, which is neither a supply of goods nor supply of services. So my outward, which is coming on credit side of PL account, no GST leviable. Now question comes, and this question I'm going to pose to you. Is there any impact for ITC, input tax credit? So I may have lot of common input services which I have used for my outward supply. So my outward may have taxable also, may have these three transactions which is not subject to GST. Now question comes, it's a schedule 3 item. Is there any impact on my common ITC input tax credit for reversal? Because I have not levied GST on these three specified transactions. Fortunately, and we have said at many occasions in the past, that GST reversal, ITC reversal need not be required. But now law has made the provision. Though these three transactions are part of Schedule 3, no GST leviable, but will not be termed as exempt supply. Meaning thereby, even though you are not paying GST, but you need not require, I repeat again, you need not require to reverse ITC, common input tax credit, for the supply on which GST was not levied. Good provision, laudable one, am I right? Having said that, only question will come to our mind, sir, this is coming by way of Amendment Act. So applicable from the date, a particular date which we are referring to, and will have all impact. Now what happened for the past period? Let's say for the past period, if we have reversed a certain portion of ITC, treating these three transactions as exempt supplies, then what happened? Are we supposed to? If we have reversed, what is the way forward? Answer to all of you. Since these provisions are being stated as a taxpayer-friendly measure, meaning thereby this law is declaratory in nature. Declaratory, meaning thereby to me, and I'm of the opinion this is applicable even for the past period, and to me it is applicable from 1st July 2017. If you have reversed common ITC, I will suggest you that you should take those credit back in your table 4 of GSTR 3B, reinstate those credit. That is my opinion to all of you. So particular provision pertaining to supply and explained at length. Now one point left out in the schedule 3 item. Again cross check whether you are really preparing GST well. Now my PL account will be having all these income on my credit side, am I right? Where you have shown in GSTR 3B, table 3 is important, am I right? Please tell me under which column we have shown these three transactions. And for your help, let me recap once again. Table 3.1a talks about outward supply, taxable supplies, B2B or B2C, either intrastate or interstate. Table 3.1b talks about export zero rated, which is export or supplies to SEZ unit or developer. Table 3.1c talks about nil rated and exempted. Am I right? And table 3.1d talks about reverse charge, liable for reverse charge under 9.3, 9 subsection 3 or 9 subsection 4 of CGST Act 2017, and table 3.1e talks about your outward, which is non-GST outward supply. So please tell me these three transactions on which GST is not leviable. Tell me under which particulars you have shown. Quick, fast. Maybe 10 seconds I can keep myself mum and looking at you. Apply your mind where you have shown. If you say it is non-taxable, then it will become exempt supplies. Exempt supplies include 3 items. Nil rated means nil rate is applicable. So there is difference between nil rated and 0 rated. Second, which is exempted by way of exemption notification, section 11 of CGST Act or section 6 of IGST Act. Am I right? Exempted by way of exemption notification. And there are certain transactions called not taxable in GST law, and which are alcoholic liquor for human consumption or 5 specified petroleum products. We non-taxable, so they become exempt supplies whether these 3 transactions which I referred now, merchant trading, high sea sale and inbound sale, is exempt? No, these are not exempt because they are neither a supply of goods nor supply of services. Schedule 3 item, at most these are going to be non-GST outward supply. Hence, there will be no impact for reversal of common input tax credit for doing these 3 transactions. This is all from first supply perspective. Now, only point which I want to draw, when you look at these papers which we have provided to you, we have given suggestions also to Government of India. What suggestion we have given to Government of India? I said taxable event in GST is supply, but the way term supply is being defined is very subjective. You have seen section 7 says supply includes. They have not defined what is supply, meaning thereby they kept this word supply wide open, subjectivity. And then inclusive definition, at least this time I was looking at that government must have defined this term in crystal clear manner, but they didn't do that. I'm just recalling the term manufacture. As you would be knowing, the term manufacture defined under section 2 subsection F of Excise Act 1944. 1944. But still as of date, we are getting lot of judgment from Supreme Court only on term manufacture, whether activity undertaken is a manufacture or not. I'm telling you this term supply going to be a very litigated point in time to come. 100% I'm telling you. Because it's subjective, inclusive. They have not defined the term in crystal clear manner. So this is the first big amendment. Item number 2. Section 9, subsection 4 of CGST Act 2017. Please tell me what is section 9, subsection 4. Maybe again I can pause for 5 seconds or 10 seconds. I want to check each one of you that really you have become GST practitioners. And your answer must come in chat box. I must see that these answers are coming in your chat box so that I can say all of you who are watching this webinar, they are up right with me and connecting with me. So this is reverse charge method, am I right? Okay, before I go further, can I again ask you another question? Tell me what is 9(4), section 9 subsection 4. Reverse charge applicable, no denial, no denial. But there are two sections for reverse charge. Section 9 subsection 3. Applicable for specified goods and specified services chargeable under reverse charge method, meaning thereby these specified goods and services subject to reverse charge and GST to be paid by recipient. Am I right? Check once again. If it is specified goods for 9(3), under which notification RCM you will look at? Please tell me. Because why I'm asking all these questions are not classroom, but still I can see you. And your answer must come in a chat box. If you want to see specified goods for reverse charge method, for 9(3), which notification applicable? Notification number 4/2017. And it is for specified services falling under reverse charge for 9(3). Reverse charge notification number 8, 13/2017. So you must make a note of it because these are not being provided in the document. And for this webinar is important, and that's what we are doing. So these recording, which is going to be content of this e-certificate course, will help you for your better preparation. 9(3) is still continuing. 9(3) is still continuing. Only 9(4) is being suspended till 30th September 2000. Tell me quickly in chat box. Which date? 2019. 19. So 9(4) ended till 30th September 2019. Now 9(4) is being replaced that government may notify specified class of taxpayer to discharge GST liability under 9(4) reverse charge for specified class of taxable person. But till 30th September 2019, it is being suspended, not applicable. So what is 9(4) by the way? Let me check from all of you. I know you can't write full text in a chat box, but maybe crisp sort, some small liner from your side, which I can see under your name. And later at the end of my, this webinar, I can recall, okay, this is what Abraham has written. This is what Mona has written. So I want that kind of active participation from you. 9(4) says, being registered recipient, recipient must be registered, who is purchasing taxable goods or services from unregistered supplier. Then recipient was supposed to discharge GST liability under reverse charge method. But from 13 October 2017, it is being suspended now till 30th September 2019. Now law is also getting amended. They are saying now it is going to be applicable only for specified class of taxable person. So this is what good, no doubt about it. But two back-to-back practical question. Until 13th October 2017, I'm sure you must have paid reverse charge. Only one exemption was available for an amount not exceeding 5,000 rupees per day for purchase from any or all unregistered supplier. Bearing this exemption, it was applicable. You must have paid and avail credit if you are using for taxable supplies. Now tell me, after 13th October 2017, since these provisions got suspended, under which particulars of GSTR 3B you have shown this transaction? Let's check, because that is how I'm really creating questionnaire for you, which you must go back after this webinar and try to visualize yourself whether I've correctly shown it. It is going to be table 5 of GSTR 3B, and it is going to be exempt supplies. I do not know how many of you have written in chat box, but this transaction going to be exempt inward supply, PL account, debit side. Am I right? So 9.4, our suggestion to the government of India was, sir, kindly take away 9.4, and I given two basic reasons to the government of India why 9.4 is not conducive and why it is creating problem for ease of business. Point number 1, and I said, I'm telling you, when we had a meeting with the Chairman Sushil Modi ji, a group of ministers which has been formed by GST Council for Ease of Business, I say that 9.4 is not conducive for two reasons. I said operationally it can't be, and legally also you can't implement the same. Let me tell you these two parameters which I stated to Honorable Minister. First I say, sir, why it is operationally inconvenient? Let's say I got Bisleri bottle for MRP 20 rupees. I'm a registered supplier, and let's you assume you all are registered recipient. Let's assume yourself you all are registered recipient, and just assume that 9.4 is applicable. So what happened if you are purchasing this Bisleri bottle of 20 rupees MRP from unregistered supplier, being registered recipient, you are supposed to discharge GST liability and the reverse charge, and I'm assuming that you are purchasing more than 5,000 rupees, so that you can't apply your exemption provision as well. So what happened? When you have to discharge GST liability on such purchase of taxable goods from unregistered supplier, it will have two impacts. First impact, being unregistered, I may have purchased from registered, he has charged GST from me, but I will not take any credit because I'm unregistered. Now when I'm supplying to you, you will pay GST and the reverse charge over and above 20 rupees, beyond 20 rupees. So what is the implication of MRP? MRP includes all other taxes and duties. Can you levy any tax by the name of reverse charge over and above MRP? I was questioned, no, Mr. Jain, credit would be available. I said, sir, what happened? Those who are not availing credit, for them this tax will go over and above 20 rupees beyond MRP, contrary to MRP concept. And second, for 9.4 application, being a recipient, you will raise self-invoice to yourself. You have to really then identify and find out HSN and SSC code for all these items. For tea, jharu wala, any, all purchase of taxable goods or services, HSN and SSC, not ease of business. And second argument I give, legally it can't be implemented. Let's listen to this one. And I am going to ask this question, so listen carefully. Let's say you all are registered recipient of Delhi. Assume yourself, you are watching All India, but for the sake of an example, assume you all are registered recipient of Delhi. You are coming to Gurgaon. Gurgaon is just 10 kilometers away. You know NCR region is surrounded by 3-4 states, Haryana, UP, Delhi, Rajasthan. So it's all connected. Let's assume you are a registered recipient. You are coming from Delhi to Gurgaon, Haryana, Gurugram now. And I'm having hotel. I'm unregistered. You're staying in my hotel. You're staying in my hotel. I'm unregistered. Now, in this case, I'm going to raise invoice, but I will not charge GST because I'm unregistered supplier in Gurgaon providing hotel accommodation services. Tell me what GST leviable, whether this transaction would be intrastate or interstate. Your chat box, your answer must flow now. Is it intrastate or interstate? As per concept of place of supply and location of supplier. So location of supplier, which is Gurgaon base, Haryana, and place of supply for this particular category is location of immovable property. So transaction would be intrastate. CGST and Haryana SGST applicable. Am I right? Now, being a registered recipient, you have to discharge this liability under 9(4). So what you will pay? CGST and Haryana SGST or IGST? Quick chat box, quick, fast. I just want to see the vibration coming as similar as I'm passing on from here. It is continue to be intrastate. But big question, you're not registered in Haryana. How you will discharge CGST and Haryana SGST? No way possible. Are you going to take 29-30 registration in case you're traveling to such state where you're not having registration? So legally not tenable, and it is being rightly understood by government. So they have done away with this provision, suspended till 30th September 2019, and now they will make applicable only for specified class of taxable person. So I think they are doing a best part, but still we have to see which class of taxable person going to face this music of 9(4). To me looks like composition dealer. To me looks like. Time will say. So I'm through with the 9(4) amendment now. Coming to the third important amendment. Composition dealer, and composition dealer is being defined under section. Your chat box must be, you should be active and reacting to my question. Under section 10 of CGST Act 2017. Now, what changes have been done? There are two specific changes in composition dealer. The first important change, they are saying the threshold amount for composition dealer going to increase from 1 crore to 1.5 crore. Good and laudable one. Unless law is having this power, unless you increase this limit in the act, you can't increase this limit by way of rules. So now this is being amended in the act. So limit is going to be from 1 crore to 1.5 crore, which government may increase as convenient in future time to come. Second, they have allowed the composition dealer. Who would be composition dealer? Either a trader or a manufacturer or specified restaurant service provider. Am I right? But for restaurant, they are having normal registration also. But composition still they can go for 5%. So these are the specific category. Now having said that, now they are saying even though you're trader or manufacturer, you can provide service. It is not, composition dealer is not available for the service sector. But now law is going to be amended. They are saying they are allowed to provide certain services with certain threshold amount. And what is that threshold amount? 10% of turnover of preceding financial year or 5 lakh rupees, whichever is higher or lower. Chat box, quickly. I want to see your answer. This is the amount, 10% of turnover in preceding financial year or 5 lakh, whichever is higher. This is what the provision says. So even though you're trader or manufacturer, taking composition dealer registration, you can provide certain services with this threshold amount. Well said. So this is the two change in composition dealer. But what we wanted from the government for composition dealer, we wanted that okay, you have allowed this service can be provided by trader or manufacturer, but we wanted that it should be given a benefit of interstate outward supply. If you're a composition dealer, there's a restriction, you can't do interstate outward supply. We have said, sir, why can't you allow to certain percentage, maybe 10%, maybe 20%. And then second suggestion which given to Government of India, that sir, for there are so many small service provider, their aggregate turnover is more than 20 lakh but less than 1 crore. Why can't you allow those service sector to come in for composition dealer? Maybe you can restrict the amount that for service sector it could be only 50 lakh rupees. So that this once allowed all SME, MSME, they will come forward. And maybe you can allow little higher rate of GST as against 1%, say 5%. So you will get lot of small service provider, they are willing to, and they want to just avoid the compliances. They are not interested rather into integrity of GST. They are saying we do not want any credit, but make our life easy. Make our life easy with a quarterly return. Make our life easy that taxable invoice or bill of supply. Maybe our threshold would be 30 lakh or 50 lakh. Allow me composition dealer. Government should have looked into this aspect as well, but they have not seen. But our suggestion gone to Government of India, and I'm sure you must be watching a lot of article which is being written by me and get published on CA Club India. It comes on homepage, and these suggestions are in form of article published at different point of time. Please, if you have taken this course, be on CA Club India home site at all time and see those articles are coming and making your GST knowledge upright, updated. And you should not complain that we are not getting amendments are coming in. Are you really capturing? That is the big question. So to my mind, we are giving. And what is this amendment class? I'm just running those provisions and explaining those provisions. But those updated articles content are available. So if you look at the videos which we are providing at number point of time, that videos are meant for you only, you guys only, so that you can keep yourself updated. Nevertheless, we are taking initiative of Sabka Saath, Sabka Vikas. What is required? Your helping hand as well to run and walk along with me. To say, yes, these courses are really updated, provided we also walk along with Bimal Jain. So this is what my message to all of you, that please come along. And then only it is really updated classes for all of us together. And your queries, rest assured, if I find the vibration that yes, you are really active participant and you have got some queries, definitely we can do once webinar in 1 month or 15 days, and we can take up those queries for answering those queries. Nevertheless, move to next amendment now. I'm sure you must have got these documents from our site. In case not, you can access later on as a course content, and which is available to you, and can watch and read both together for keeping yourself updated. Now coming to the next provision of time of supply. You know, time of supply has been given under section 12 for goods, under section 13 for services. This is what the time of supply provision. If you look at earlier, that time of supply provision got reference of 31 subsection 1 only. And 31 is what? When to raise tax invoice. Section 31 subsection 1. Now the subsection 1 reference is being cut. So it is made whole applicable for section 31. So applicable for forward charge, reverse charge, continuous supply, as required to determine time of supply under section 12 and 13 of CGST Act 2017. Having said, now come to the input. Very, very important. Input tax credit. GST input tax credit provision. What is GST input tax credit provision? Before I start taking amendment, let me have quick recap. Since we are doing this class as a part and parcel, quick recap. Being a recipient, how you can take credit? Any parameter? Do you know any provision? Please tell me and write in a chat box quickly. Being a recipient, what are the provision and condition you need to look into for availing credit? Tell me quick, fast. There are 4 condition. First condition, you must have. Second condition, you must have received goods and services. Third condition, supplier must have paid taxes. Are you listening? Supplier must have paid taxes. So what happened? If you have been a recipient, you have paid the amount along with taxes to your supplier. But your supplier has not deposited the tax to the government. Can you avail credit? Please tell me. Write in a chat box. Can you avail credit? As per law wise, credit is not available unless supplier pays the taxes. You may have your question saying that why recipient would be denied credit when he has paid the amount to the supplier and supplier has not deposited, but that is how the law provision. And last condition, that the recipient must have filed the return, then only credit available. So first question was what we should do now. This is a big problem, and you must have seen that you have availed credit, right, in your table 4 of GSTR 3B. You have availed the credit, but you are finding that the particular credit and particular purchase for which you have availed credit is not being reflected in 2A. Maybe a first case, you have paid the amount to supplier, you are having invoice, you have received the goods, you have paid the amount to supplier, but still your supplier has not uploaded outward supply GSTR 1. It is not coming in 2A. What happened? Can you take credit? Second question, yes, it is coming in by 2A in my purchase. But can you say supplier has paid the taxes? No, you can't say that unless you go back and check with GST invoice that this supplier has filed the GSTR 3B. So if you are a supplier, you have uploaded outward supply, you have filed your GSTR 1, 2A would be generated. But 2A is not conclusive in stating that this supplier has paid the taxes unless you come to know he has filed his GSTR 3B. So these are all subjective terms for GST audit. So maybe today I will not touch base much in detail GSTR 9 and 9C, which we will do in the month of November for all participants of this e-certificate course, and we'll discuss at length. But definitely it is going to be important for you to really analyze that 2A is not, can really check this supplier must have paid the taxes. What you will do, maybe one suggestion I'm giving you at this point of time, take certificate from all such supplier saying that to whom it may concern, this is to certify that I have supplied so and so by invoice number so and so, for this I have paid the taxes and deposited my return as on date. If any fault therein, I will be held accountable, responsible to make your position wiser. He will indemnify you for any losses, for taxes, interest and penalty and any consequences in this regard. Maybe this is one way. Second provision, what I was looking into in GST ITC credit. There's a provision called, I'm a supplier. I've raised the invoice, let's say for 100 rupees. I charge GST 18%. Being a recipient, can you take credit without making payment to me? Quickly write in your chat box, yes or no. Yes, credit is available, irrespective of fact whether you are paid to me or not. But condition there, you must pay. Being registered recipient, you must pay to me within 6 months from the date of invoice. If you don't pay within 6 months, then what happened? Credit taken by you need to be reversed, and that too along with interest. So you can take this credit back once you pay to me. But what happened to interest? Interest is a loss. Am I right? Interest is a loss. What happened if you pay a part payment? Can you take part credit? Possible. Part credit can be taken. So these are the two provision, important provision, maybe important from audit perspective also, which you need to work out. Tomorrow or Monday, just wait for the Monday. I'm going to create one template for you for your 3B for the month of September. What are the important precautions, key action point for filing GSTR 3B for the month of September 2018? Keep watch on our homepage. This article will come quickly. You will get all glimpses and a key action point for filing GSTR 3B. So this is not a part of amendment, but important for your filing GSTR 3B. Now, what are the amendment in GST input tax credit provision? The first and foremost one, motor vehicle. There are so many disputes from day one. Now, what is the amendment proposed? Amendment proposed that motor vehicle having a capacity of not more than 13%, including driver, credit, it is being used for further supply or transportation of passengers or training purpose. Now this is the provision. This is a new amended provision. Now they are saying this is the amended provision. So questions, there are 2-3 questions, big questions coming to everyone's mind. And it is from provision which was existing prior to amendment and post amendment. Now one question may come that you got a bus, you're a company, you got a bus. Now you are taking bus is being purchased for transportation of employees. Can you take credit? Of course it can be taken now. If you are taking services on rent of buses, can you take credit? Buses I'm saying because it is having capacity more than 13%. If it is less than 13, like a cab, can you take credit? No, you can't take because less than 13%. But if rent a cab is obligatory for employer to provide employee consent under any law for the time being enforced, now credit is available. So this is how the law is being amended. So in general, if you take any motor vehicle which is for transportation of goods, take 100% credit. Any construction sector, real estate sector, they buy tractor, they buy so many motor vehicle which is used for the provision. Credit is available for transportation of goods, truck and etc. This is now generally made available. Only specific provision as prescribed motor vehicle having capacity of not more than 13% including driver. Further for specified services like for further supply, you're in the same business, take credit. If it is for transportation of passengers, take credit. Or if for training purpose, education, training purpose. This is what the specified provision. Now, within this provision, there are 2-3 provisions which is keep creeping at all time. What happened for my repair maintenance of car? Can I take credit? Now, this provision is made specifically that the credit of repair maintenance available only for such vehicle. So what happened when you are purchasing motor vehicle? On purchase of motor vehicle, credit is available because you are using for the specified purpose, then you will get credit of repair maintenance. But on purchase, credit is not available, then you will not be given credit on repair maintenance. Only 2 points, we have to pause just for a minute.
थोड़ा ऊपर कर लीजिए, हाँ ऐसे.
ठीक
हाँ
ठीक है. Okay, let's take on. So when you have taken credit on purchase, you'll be given credit on repair maintenance also. But only 2 sectors, manufacturing sector and insurance sector, are being allowed to avail credit on repair maintenance. Now only question left out, this provision now being specifically made in the law. Can we take credit for the past period when this was not the part of the provision? To my mind, we can always say yes, when it was not a part of the law, I can take credit on repair maintenance, even though credit was not available on purchase of a car. So this argument can sustain and can hold good. This is not being specifically made, so any restriction coming in the law cannot be applied retrospectively, it should be always prospective. But now clarity comes, credit of repair maintenance available or only when credit available on purchase, including your manufacturing sector and insurance sector. But again prospective, what for the past period? Available. Second change, employer and employee related. Very interesting. Now they have said food, rent-a-car, life insurance, health insurance, etc. If these are the goods or services supplied by employer to the employee, credit is not available unless this is obligatory, under any law for the time being in force for employer to provide to the employee, or you are into the same business. Meaning thereby now all such employer company will get credit on food supply, rent-a-car, life insurance, health insurance, provided these are under obligation under any law for the timing in force. Or you are into business, such business, then provider open up. I would like to do one case study with you so that you get a quick snapshot, and it's a very good snapshot which I'm discussing with all of you. It was before Advanced Ruling Authority. A particular company was getting food supply to the employee concerned. So for food supply, maybe lunch and dinner, they're getting food prepared by the outdoor caterer. So let's say outdoor caterer is charging 100 rupees per thali. 100 rupees per thali and charging GST. Now first question is, being company, can you take credit of GST charged by outdoor caterer? As per earlier provision, no, it was not available. But now as per amended provision, credit available if it is obligatory under any law for the timing in force. As per amended provision. Now, what was the advanced ruling? Let me go further. Now, being company when purchasing at 100 rupees, supplying to the employee concerned free of cost, FOC. One option. Second option could be, I'm supplying at subsidized rate, let's say 20 rupees. Tell me, when I'm supplying free of cost, FOC, but purchasing at 100 rupees and paying GST, can I avail credit? Question to you. I would like to see your chat box. Please tell me. I have said the amended provision to you. I would like to really see whether you can really respond back. I'm purchasing at 100 rupees, GST charged by outdoor caterer. Can I avail credit if I'm giving free of cost to my employee concerned? Please tell me quickly. As per the law, now it is possible. If the food supply is under obligation, obligatory for employer, under any law for the timing in force, credit is available, 100% available. Second, if it is not obligatory, let's say it is not so for service sector, you know, under Factories Act 1948 provision exists that you have to provide food, lunch and dinner to your employee concerned. But what happens if it is not obligatory for service sector? Can you avail credit of GST charged by outdoor caterer? Please answer it. Credit is available or not? Then credit is not available. But what happens when you are giving FOC? Is there an implication of entry 2 schedule 1? Entry 2 schedule 1, even without consideration, supply of goods or services between related person and employer related person in the course of furtherance of business. GST leviable. Fortunately, there's a press release issued on 10 July 2017. They say it's a part of employment contract. No GST leviable. Fortunate. Now, what happens when I'm supplying a subsidized rate? 20 rupees. Question comes whether GST leviable on 20 rupees. If you look at the law, GST leviable, definitely. But then what would be the value? 20 or some other value? It would be some other value. Because employee or related person, Rule 28 of CGST, Rule 2017 applicable, and it said it should be open market value, like kind and quality, or 110% of cost of provision of goods or services. That is what the Rule 28 talks about. So even though you're charging 20, but you have to make it comparable to open market value for GST leviable. So what happened? If GST leviable and that too on transaction value at arm's length, maybe 100 rupees, because your purchase is 100 rupees, can you avail credit? Then credit is available, 100% available. And one more question we get, what is the GST rate applicable when outdoor caterer is giving services to the company? 5% or 18%? 5% or 18%? To my mind, 5% applicable. There's no denial to it because we get lot of queries. I'm trying to solve those queries with this amendment clause. So I'm through with GST, ITC, but there are 2-3 items which I would like to highlight today. In GST, we got 17 subsection 5 block credit. Negative list. Block credit means credit is not available. And we are proposing to the government and we are giving suggestion to the government at number of occasions. And what are those suggestions we are giving? Like first suggestion, when I'm giving my sample, my own sample, is it going to be free sample or it is in lieu of my sales promotion? When you look at our given sample which I'm manufacturing, it is always in the nature of sales promotion. It is not free sample. I'm giving sample so that my business must grow. Why it can't be considered in the course of furtherance of business? When you're giving one product and giving another product free, it becomes composite supply. The free product is given. Is it free? No. It's a part of my combo offer. When the credit is available, of course available. What is gift? Gift is when I'm giving to someone under no obligation. But when I'm giving one product along with another product, can I say it is a gift? It is not gift. So maybe these are the provisions creating really open debate among all of us together. So when we are becoming GST practitioners, please pay sincere attention on those provisions because these provisions are going to help you to prepare how to really capture GST provision, apply those provisions in specific scenario. One more point I have raised for GST ITC. I have constructed this factory or office, anything possible. If I'm a manufacturing sector, I will construct factory for manufacturing of goods. If I'm a service sector, I will construct office for the provision of services. Can I avail credit on GST charged by a contractor on construction of factory or office? Can I do that? If you look at the law provision 17 subsection 5 of CGST Act, the law very categorically says that credit is not available. And what we are representing to the Government of India, and we are saying at repeated occasions, sir, please, these are always in the course of furtherance of business. Without office or factory, I cannot run my show. So these are the suggestions given to the Government of India. But these are again open Pandora's box. And from your annual return perspective, GSTR 9 and 9C, you need to identify all such goods or services which are ineligible for availing credit, and those figures need to be mentioned specifically in your GSTR 9 and 9C. So you have to really go back and check your reporting, which is being done from GST 3B or GSTR 1 perspective. So this is on input tax credit provision. Now, having said that, now coming to the next provision, which is called on registration. Now, you must be knowing registration provision. Registration is applicable only when aggregate turnover crosses 20 lakh rupees. Am I right? And what is the meaning of aggregate turnover? It includes intra-state taxable supply, includes exempt supplies, and exempt supplies means there are three transactions. Nil rated means chargeable at nil rate, or exempted by way of exemption notification under section 11 of CGST Act or section 6 of IGST Act, or which is non-taxable, meaning thereby non-taxable means alcoholic liquor and 5 specified petroleum products. These are exempt supplies, but value need to be included in aggregate turnover for claiming threshold amount for registration purpose. And then it has to be included export turnover, export of goods and services. And last, interstate taxable supply. This aggregate turnover should not include any reverse charge liability, and CGST, SGST, UTGST, IGST and compensation cess, if any applicable. This is what the meaning of it. When we started on July 1, 2017, it was stated that we can take one registration for multiple units in one state. So if I'm having, let's say, 4 factory in one state, let's say Uttar Pradesh, I was having 4 excise registration in pre-GST era, but in GST it was not required to have 4 separate registration within same state. I can take only one registration. So there will be one principal place of business and all 3 would be additional place of business. Unless we are having different business vertical. So different registration was permissible only when we are having different business vertical. Am I right? What happens if I'm having 4 factory in 4 different states? Then of course I have to take 4 registration in 4 different states. There was no option available to me. And they become distinct person if they are having separate registration in a different state. If you take, let's say, 4 factory in same state and 4 registration business vertical wise within same state, they all would be having a distinct person scenario, status, if they have taken 4 separate registration. This was all before this amendment, pre-amendment. What is the post-amendment now? Very well, and it is really widening up. Now they are saying, Mr. Jain, now we can take separate registration. I'm repeating again. We can take separate registration with a different place of business. So concept of business vertical wise gone away. So let's say in one state, I'm having my business at 4 different places: Lucknow, Noida, Moradabad, Ghaziabad. All 4 in one state. Irrespective of fact, what is my business vertical? Now law is permitting I can take 4 separate registration. 4 separate registration. It is permissible now. They have used the term may. It is not compulsory. If you are willing for, you can go for separate registration, but only from a date to be notified. Now this is a well for SEZ unit and non-SEZ unit within same state. Law is saying there has to be separate registration, so that they will have different status quo pertaining to SEZ unit and non-SEZ unit. Now, one problem which I foresee and which I'm looking for by way of rule, which has not come as yet, but I'm looking for maybe when after 2 months or 3 months when we will again do the amendment class, we can explain this concept, and this concept I'm explaining to you. Let's say I got my 4 registration in the state of UP. I've taken only 1 registration for pre-4 registration, because in pre-GST era 4 excise registration merge into 1 registration. So just go with this thought process that pre-GST I was having 4 excise registration merge into 1 excise GST registration. I'm carrying forwarding. Now this amendment has come because I'm having 4 different places of business. So I've started maintaining 1 common e-credit ledger. I'm having a balance of 1 crore rupees in my common e-credit ledger. Let's assume hypothetically. And now I'm being permitted to take separate registration at a different place of business. How to this common e-credit ledger into 4 distinct registration which I'm opting for. There is nothing prescribed in the law, but there may be one way that, let's say I'm having output liability only in unit A. I would always prefer that this common e-credit ledger balance go to that unit only. So whether it will be in this manner or will have to be divided on certain other parameter, nothing is being specified. So maybe we have to wait and watch for rule to be amended in this regard. How to bifurcate or distribute common e-credit ledger when I'm opting for separate registration on different place of business. Hope clarified. Having said the registration, now moving to another provision, cancellation. In GST, we have seen that you have gone for cancellation of registration, but the process is not active. We all know GSTN is not active properly. So unless the cancellation is being approved by your jurisdictional tax officer, you continue to be active taxpayer. So what happened? The first question comes, unless it is approved by your jurisdictional tax officer, though you have applied for cancellation, shall you stop complying with the provision even though there is nil transaction? Maybe you would be saying that I need not require to file my GSTR1. Can we say so? My answer is big no. Till the time cancellation is officially approved, you are active taxpayer and you have to comply with the tax provision, GST provision as existing, even though there is no transaction. So now law is being amended and given the relief to all of us together. What's saying, if we have filed application for cancellation, then the government, the tax officer, may allow suspension. So they may initiate this suspension till finally approved as a cancellation. So during the suspension period, you need not require to follow the provision of the law. And then within the stipulated time period, the tax authority may look into your application and finally approve cancellation. So relief is being granted. So that the time period is giving some kind of breath for not complying with the provision, which we have seen because GSTN network is not active and we are not being able to really get a cancellation done for any reason if we have applied for cancellation. So this is the provision pertaining to cancellation of registration. Moving to the next provision, debit note and credit note for multiple invoices. Let's listen so that you can understand this provision. Let me put this as a question here first. You must understand the question and then I will look at the answer from all of you. Question H. Can you issue one credit note or debit note pertaining to multiple invoices? Multiple invoices. I'm using the term. Let's say you're having 100 invoices. Can you issue only one debit note or credit note pertaining to 100 invoices? Possible. Before this amendment. This amendment has got approved but yet to be implemented. But I'm asking this question to you. Can you issue just one debit note or credit note? Answer H. Your chat box, yes or no. Not possible now. We have to issue one debit note or credit note pertaining to one invoices. That is what the law prevails. And you have seen while filing GSTR 1, if you have issued credit note pertaining to one invoice, you have to issue one credit note per invoice, right? So as many invoices, as many credit notes need to be issued, creating obstacle, uneasiness in the business. But now law is getting amended, providing a relief to all of us together. And what is the relief? Now law is permitting that we are allowed as a taxpayer to issue one debit note or credit note pertaining to multiple invoices, laudable one. But this is yet to be implemented. This is not yet implemented. GSTR 1 is not accommodating like this. It is only way forward they are referring to. So this is debit note and credit note. Coming to the next amendment, which is Simplification of GST return. Here I would like to discuss some of the important aspects. Okay, let's start with now simplification of GST return. Before I touch with this provision, this is the part of GST Amendment Act. We have to really understand where from we started on July 1, 2017. July 1, 2017, we started with GSTR 1, outward supply, to be filed by 10th of next month. Being supplier, you are filing GSTR 1, outward supply by 10th of next month. It gets auto-populated for a recipient in GSTR 2A. So recipient can do add, modify, delete as required to be. While finalizing GSTR 2, and it is supposed to be by 15th of next month. 15th of next month. Having said that 15th of next month, the question will come. When being recipient, if you do add, modify and delete, then what happened? There will be one A and that is getting populated for supplier to accept or reject by 17th of next month, and then GSTR 3 need to be finalized by 20th of next month. This was a thought process when we started GST. But do we have really progressed in that direction? Answer is no. From the very first month, we have done away the concept of GSTR 2 inward supply, GSTR consolidated kind of thing. What we are doing in existing time period, as on date, we are filing only GSTR 1, which is outward supply, right? And we are filing GSTR 3B, which is consolidated of my outward, ITC, which is inward, and the net liability. This is what we are doing today. And many problems are coming as on date that if I have purchased from a supplier and supplier has not uploaded the invoice, how can I avail credit? If supplier has not paid the taxes to the government, how being recipient I can take credit? Many things are going on. So what happened? Government formed a committee headed by Mr. Sushil Modi, Deputy Chief Minister of Bihar, and they got two proposals from two different subcommittee formed. One was headed by Mr. Nandan Nilekani, and another one was headed by CEO Mr. Pandey of GSTN. Both committee has given suggestion to this committee formed, ease of business, simplification in return filing. Now this committee has given proposal to GST Council, and GST Council has brought the amendment provision in new section 43A for return filing as a way forward. And I'm just giving you some glimpses. What will be return filing in time to come? In way forward, this is yet to be implemented. They have not said anything. They have created two categories. The one category would be over and above aggregate turnover of 5 crore rupees. So taxpayer having aggregate turnover more than 5 crore. And other aggregate turnover less than 5 crore. And as per the data as stated by GST Council, 93% of taxpayer going to fall under the category less than 5 crore. So only 7% of taxpayer would be falling in a category having aggregate turnover more than 5 crore rupees. Now what GST Council has proposed, and they are saying that way forward, as in when it is going to be implemented, they are saying the return would be monthly return, except for such taxpayer who is having aggregate turnover less than 5 crore, and for them they are talking about, but not mean that your liability to pay GST will go away. You have to pay your liability on a provisional basis, on monthly basis, and then you will finalize this payment with your quarter return. So meaning thereby you may not be filing monthly return, but payment of taxes monthly for taxpayer having aggregate turnover less than 5 crore. Second provision, importantly, they say now in new system, being recipient, credit would be available to you only when supplier upload outward supply particulars, outward invoice. So once supplier upload outward supply invoice, being recipient, you can see at a real-time basis, which you may accept, reject, or keep pending. These are the provision given. And once you accept the invoice, then this invoice get locked. This invoice is going to get locked. Liability get crystallized in the hands of supplier, and supplier has to discharge this liability. And once you accept liability get crystallized, you can avail credit. This is what way forward provision, meaning thereby now your credit, recipient credit, is dependent only upload outward supply invoice. If there is a mistake, they are talking about accept, reject, keep pending, modify also in T plus 2 months. In T plus 2 months, these provisions are available, but this is now very important that way forward regime in GST for return filing and availing credit is dependent on supplier. Recipient will get credit only when supplier upload the details, only for entering transition time period. Entering transition time period, they are saying that they will keep the window open. Even though supplier has not uploaded, recipient can avail credit. Include all such transaction which is not uploaded by supplier. Avail those credit on provisional basis, which supplier need to accept within T plus 2 month time period. Tax period plus 2 months time period. Then only this credit would be available. Otherwise, this credit would be called provisional credit. And this window of provisional credit, they are saying only for the 6 months. From the date this new regime going to be introduced. So we have to wait and watch. This is what the way forward going to be in terms of section 43A of CGST Act. So details still they are working on it. They have shown that the return format, taken public comments also. Might be some of you or all of you may have seen that draft return format which is going to be way forward. They have talked about quarterly return with a Sahaj and Sugam, B2B plus B2C or B2C transaction. B2C transaction, they are saying that this is only one return can be filed through SMS. Lot many things is being stated, but how it is going to be implemented, we have to wait and watch. So nothing in detail part, maybe in subsequent, when this new written format is coming in, we can take up those things and discuss at length. So 43A are done. Now they are talking about GST practitioners. So GST practitioners are being now permitted for filing refund claim apart from filing return. So this is the laudable one. GST practitioners are being given lot of opportunities, and they are taking exams also. Some of you may have also registered yourself as a GST practitioners. I wish each one of you, those who are doing that GST practice and being certified practitioners, you must grow and grow in a multiple way. That would be my best wishes to each one of you. Coming to now, payment of taxes and utilization of credit. I'm going each point wise. When you run through this document, which should be available to you, you can always see this video later on as a recording part and content of your course. Now, what is this payment of taxes way forward? See, while making GST payment, we got two ledger. One ledger is a e-cash ledger and one is e-credit ledger. But when you go to e-credit ledger, you got your IGST credit, you got your CGST credit, you got your SGST credit or UTGST credit or compensation cess. Now they have decided priority and they have decided a parameter that how you are going to utilize the credit. Let's say you are having all balance. You are having balance in IGST credit. You are having balance in CGST credit. You are having balance in SGST credit. If at all you have to utilize e-credit ledger, when all three e-credit ledger is having balances, you must use first your IGST credit ledger. Why they are using so? Why they are saying so? They only want that you must utilize your IGST credit ledger so that your balance in IGST get knocked off, utilized. So they, whatever money they get from IGST get appropriated between central and state and should not get locked, held back in IGST credit account, which is subjected for future distribution between central and state. And this is a dispute going on. For that reason, they have given the priority order. In what order you must use? You first use the IGST credit ledger, then CGST credit ledger, then SGST or UTGST credit ledger. But order of utilization, IGST credit can be used sequentially, first for IGST, then CGST, then SGST. You have to follow that one. CGST credit can be used for first for CGST, then IGST. Similarly, SGST credit can be used in sequential manner, first for SGST, then IGST. Only parameter CGST and SGST should not be cross-utilized. So this is provision pertaining to utilization of e-credit ledger. Having said that, move to GST refund. GST refund, what are the changes? Two important changes. Two important. You know, GST refund is permissible when you export goods or services, or you supply to SEZ unit or developer. So when you export goods and services, again two options are available. The option one, you can export on IGST, take rebate or refund of IGST. In that case, you need not require to execute LUT, later of undertaking. Second option, don't charge IGST. You export without payment of GST but claim refund of ITC, input tax credit. Now I want to do some this case study with all of you so that you get my message clearly. Being exporter, you're having two options. You can export on IGST. You can export without payment of IGST but refund of ITC. Tell me, question to all of you. If you are a GST consultant, you have to advise to your client which option you are going to suggest to your client. IGST route or only refund of ITC route. Which option? Quick. I want to see in your chat box your suggestion. Which option you'd be suggesting? Maybe 10 seconds quickly. I want to have your expert opinion. Which one you're suggesting? IGST route or refund of ITC route? Okay. Whatever you have written. But let's listen my expert opinion. I will suggest you must follow the route of IGST. And why? Listen now. There are two important parameters why I'm suggesting so. Let's say I'm an exporter. I'm purchasing input and input services, let's say for 50 rupees. And 18% GST applicable. So I would be having credit of 9 rupees, that 18% applied on 50 rupees, 9 rupees credit. So 9 rupees credit, let's say out of 9 rupees, 6 rupees credit for inputs, 1 rupee credit for input services, and 2 rupees credit for capital goods. So this is my inward ITC. Now I'm exporting. Let's say I'm exporting at 100 rupees or $100. When I'm exporting at $100, I'm following, let's say, IGST route, then I will apply 18%. I will apply 18%, so I have to discharge IGST being export 18. So for making payment of 18, I can use my this 9 rupees credit line to me, and I can pay 9 rupees in cash from e-cash ledger. So once this is being paid, I will get the refund of 18 rupees, which includes 9 rupees ITC also. So I got all 18 rupees in cash back. So you'd be thinking, sir, it's paid and taken back. What is the advantage? No advantage. I will tell you the advantage. For that reason, I'm creating example for you, so that you will get really clear snap. Let's say I'm following the route of refund of ITC. So I will not apply 18% on my outward, am I right? So there will not be any IGST on my outward. So when I'm exporting without payment of taxes, I need to execute LUT. letter of undertaking. And for execution of LUT provision says any exporter of goods can execute letter of undertaking provided he is being not prosecuted for an offence involving an amount more than 2.5 crore. This is what the provision. So LUT is permissible to all exporter of goods, exporter of services. Now I'm not applying any IGST on my outward. So 9 rupees ITC, can I go for refund of 9 rupees ITC complete? Chat box quickly. To me 9 rupees full not available. Tell me who is going to give me the answer. How much refund I would be getting when I'm going for refund of ITC route? Tell me quick. It is 5, it is 6, or it is 9 what? I do not know. 6 rupees you got credit on input, 1 rupees credit you got input services, 2 rupees credit you got on capital goods, totaling 9. Tell me what refund of ITC I can go for it. It is 6, 7 or 9. So quick fire. Chat box, it is only 7 rupees. Blockage of 2 rupees credit on capital goods. Credit is not, that refund is not permissible. Credit is available. Refund will not be permissible. So what happened? This 2 rupees getting accumulated for you. So this is not advisable. But in case of IGST, you have utilized the 9 rupees including capital goods and got refund in cash. So IGST route is first disadvantage. Second, when you follow IGST route, your shipping bill, important document. If shipping bill details match with the ICE gate when you export goods, then this shipping bill details transmitted to GSTN, and once match you get auto refund, and there's no percentage to be paid to anyone. You understand the meaning of percentage to be paid. So IGST route is thoroughly driven by automated, system operated, and no manual. Manual is going only pertaining to refund of ITC. And there was a problem in preceding, prior to this amendment, whether this refund of ITC would be monthly, quarterly, yearly. This is what now being amended. You may opt for monthly, quarterly, or yearly per convenience to you. But ITC still we are getting. And recently, FIO, Federation of Indian Export Organization, has said that around 12,000 crore rupees refund is held up only on refund of ITC. So if at all you have to give advice, you must advise follow a route of IGST, which is smooth, automated, no percentage to be paid to anyone. Coming to now next provision, recovery of taxes. This is one of the draconian provision. I have used the word draconian provision. Now you should get alert yourself. What is that draconian provision I'm referring to? Let's say I'm having 4 registration in 4 different states. Delhi, Maharashtra, Karnataka and Gujarat. Let's say I've got some liability to be paid in Delhi and I'm not paying because there's some dispute on law provision. In Delhi, I'm not paying taxes because of some dispute on interpretation of law. Question comes, for payment of Delhi, can you really collect the tax from my Maharashtra registration, Karnataka registration, Gujarat registration? Can you collect that? Please tell me. Now this law has made, and law is saying government is now being empowered. They are given this power, and which I am saying draconian power, that they can collect tax of Delhi not paid because of my bona fide interpretation of law from my Maharashtra registration, from my Gujarat registration, from my Karnataka registration, which I am not agreeing to. If that be the so, then I would be asking government, if my refund is being held up in Delhi, can you get it from my Maharashtra registration? Can you get it from my Karnataka registration? That should be at par. For collection, they are going to my other registration, being distinct person. How they can collect it? Then what is the concept of distinct person? But this is a draconian provision, and this is how the law is being amended. I do not know whether you have captured this provision or not. Draconian one. And next critical provision, pre-deposit. Now, I do not know, you must have seen that our appellate mechanism has started only pertaining to e-bill. How much pre-deposit need to be deposited for filing appeal? As law amended, and law is saying that when I'm filing first appeal, commissioner appeal label, then I have to deposit to the extent of 10% duty tax, 10%. Now they are saying subject to threshold of 25 crore from CGST Act. So taking SGST Act into consideration is a 50 crore. When I'm going to for second appeal, which is before GST tribunal, pre-deposit will be 20%, but subject to threshold of 50 crore, meaning thereby 100 crore. So this is the threshold they have created for first appeal and second appeal. 50 crore and 100 crore. Threshold is very good, no denial to it. But if you compare this threshold with pre-GST era, it was only maximum of 10 crore rupees. 10 crore rupees, and you'll be recalling 35F, Section 35F, Central Excise Act 1944. We have to pay 7.5% for first appeal stage, and for second appeal stage only differential 2.5%, but subject to maximum of 10 crore rupees. Now, which was 10 crore, now it is now 50 crore for first stage appeal, 100 crore for second stage appeal. Is too high a big amount. It is not creating ease of business, working capital block. And second, when I have to pre-deposit, and which I'm sure I will win my case, and we all know how department issues so-called notice. They issue at random, and we have seen 80%, 90% success rate for taxpayer. So what happened? Whatever deposit, pre-deposit I have made for filing appeal, I will get the refund, and I should be given interest also, right? So interest rate would be what? What is the rate of interest? What rate they are going to give it to me? They are referring 6% and 9%, am I right? But when I'm not paying taxes to the government, how much rate of interest they are charging? 18%. Why not? Comparable. When they are supposed to refund back, they must pay back to me at same rate of interest when they are demanding, when I am not depositing the due taxes to the government exchequer. So this pre-deposit, which is too high amount, should be looked into. But law is being amended with a threshold of 50 crore for first appellate stage, 100 crore for second appellate stage. Going to now, detention, seizure and release of goods. Now, we all know section 129, section 130 relevance. There is a provision. 130 talks about confiscation of goods. And you know, today, as on date, we are getting many queries only on e-bill. Who can issue the seizure note? Who can issue so-called notice? With a cross empowerment permissible or not permissible? We're getting many queries. I can tell you many client comes to me. Let me cite one recent case. LG Electronics is our client. They transported goods from Maharashtra, Mumbai to Noida. So they are registered in Maharashtra as a supplier. They are registered in Noida as a recipient. Registered distinct person. Now when goods start moving from Mumbai to Noida, vehicle got intercepted at midway at Indore. And Indore, MP GST fellow has issued a seizure note, issued a so-called notice. Now, after file my reply for that so-called notice, question comes and which I'm going to ask you. Am I supposed to file my reply to MP Madhya Pradesh GST officials, or should I go back to my tax jurisdictional officer in Maharashtra? Please tell me. If at all this order is being decided against me, which is virtually at first level adjudication, if appeal has to be filed, where to be filed? Maharashtra, Mumbai, Indore, or Noida. I say supplier is Maharashtra. So everything must go back to Maharashtra only. Why I have to go to Indore for filing my reply and appeal? If that be the so, LG is a big client. What happened for a small timer? I'm only one registration in Delhi. My goods going to Kerala, and Kerala follow intercept. Am I supposed to go to Kerala and file my appeal and everything to Kerala? Need to travel Kerala all the way for getting appeal? Then this is not one nation, one tax. This is creating big mess and confiscation. You know how the lot many so-called have been issued, big debated, but this is the irony. Law is evolving, and still we have to reach to a level of good and simple tax. Coming to the transitional provision, Chapter 20 of CGST Act 2017. So we are reaching nearby to 2 hours, which we have planned for. And I'm sure your lot many queries has started peeping in my chat box. I got some of the queries in advance also, so I will try to take up queries as many as possible. But let me first complete all amendment so that at least with smiling face at the end of this class today, I want each one of you at least send a smiling face. You should not say that yes, this GST certification course, and that's what distinction I want to carry. There are lot many provider, but I have always taken from my side, money should not be taking this in yes, we expert and more GST expert, not only in Delhi, pan India, irrespective of any religion, language, caste, and simply say GST law is the Gita, Bible, and Quran for all of us together. Trying my best, you must come back with your smiling face. Yes, it is helping you, and you give constructive suggestion and feedback. We always try our best, and we will continue to do this initiative as permissible to us, but with your support, guidance, and really, when you walk along with me, I say that walk along with me, you have to really follow me in a religious manner to get all snapshot of update which we are issuing. Coming to the transitional provision, only one important aspect. Question was, can I really carry forward the credit of education cess, secondary higher education cess, Krishi Kalyan cess? Are you recalling? These were the provisions, secondary and higher education cess we have said. So, Swachh Bharat cess, SBC cess can be carried forward. This was a big debate day one. We got two schools, and both the school has got their way to justify the provision. Some school says yes, we can carry forward. Some school says no, it can't be carried forward. But now law is being amended. Amended retrospectively, my dear friend, from 1st July 2017. And this amendment has been done to ensure that we should not take credit or carry forward credit of education cess, secondary higher education cess, Krishi Kalyan cess, and Swachh Bharat cess. We should not carry forward retrospectively. While doing so, the cropped up in section 140 subsection 1. Unintentionally I'm telling you, but problem has cropped up. Service tax credit looks like cannot be carried forward. Credit of excise duty on capital goods looks like can't be carried forward. Credit of excise duty on input which is not in stock looks like cannot be carried forward. But this is all unintentional. 140 subsection 1 clearly permitting all of us together that we can carry forward. Only point was pertaining to these cess which I am referring to. They have made the amendment, but making amendment they have made the big mistake and created big mess within the provision, and this is hue and cry. You must be knowing that I have filed number of writ in different high court on Tran 1. We could not file Tran 1 by due date 27 December 2017 because system glitches, system error, and we got all writ succeeded. It has been allowed. In some of the writs, specifically, they have asked, Honorable High Court has asked the nodal officer to listen our grievances within the stipulated time period and come back to us. But these are the debate traveling to the High Court for system glitches and error, apart from the law amendment. Now, if law is being amended so half-hearted, creating more questionnaires rather than clarification, we are going away from the concept of good and simple tax. But irony is like this. So if you really look at and posting this query to me, sir, can I carry forward credit of cess? To my mind, law is being the part and approved by the parliament. And any court of law, be High Court or Supreme Court, look the law. If law is not permitting, then we can't carry it forward. But problem is, if we have carried forward, now it is being retrospectively amended. If we reverse and pay, do we have to do with interest and penalty? To my mind, they should have provided one time window with a time period that, okay, reverse if you have taken wrongly, no interest and penalty. But still, if they have not provided, I'm of the opinion no interest and penalty would be leviable in all such cases. Coming to now job work provision. You know job work section 143. Time permitted that whatever input sent to a job worker can be returned within 1 year. Capital goods within 3 years other than mold, dies, jigs and fixtures. Now law is permitting in some circumstances, commissioner is being permitted to extend the time period 1 year, over and above 1 year for input and 2 years for the capital goods. This is for 143 job work provision. Coming some of the IGST Act provision, I would like to highlight only one important provision, that export of services. There is a provision called we must receive in convertible foreign exchange, but they have inserted in some of the cases wherever RBI permits, money can be collected in INR, Indian rupees, and that will suffice the purpose of export of services. So these are all amendment provision which I have done today. I am left out with TDS and TCS. For that, quickly, 5 minutes I will take, but detailed part we will do later. But otherwise, these documents are being provided to you. You can run through those documents, prepare yourself, and then if anything coming to your mind, you can always write back to us. In TDS and TCS provision, TDS applicable from 1st October 2018. What is TDS? They have said the specified deductor. So let's take the example, I'm a contractor and you are my contractee. So you are recipient. You would be releasing payment to me, right? So you have to take registration as a TDS deductor. Now, who could be TDS deductor? There is a specific provision. If you go to this particular, document which is being made part of course material now, it is specifically saying deductor would be a department or establishment of central government or state government, local authority, governmental agencies, or such person or category of person as may be notified. And who are being notified? An authority or a board or any other body set up by an act of parliament or a state legislature or established by any government with 51% or more participation by way of equity or control to carry out any function, or society established by central government, state government, local authorities under Society Registration Act 1860 and public sector undertaking. So deductor are majorly public sector enterprises. government enterprises, society registered under central government, state government, and local authority society registration act. So deductor is not the private player. Deductor is always a government enterprise, PSU, as notified. They have to deduct a specified percentage of TDS, and how much? 2%. If it is intrastate, then 1% CGST, 1% SGST. If it is interstate, 2% IGST. For such contract, if contract value is more than 2.5 lakh rupees, so it is not applicable in all cases. It is applicable only for such contract where contract value is more than 2.5 lakh. Now what happened when I have to deduct TDS? I am a deductor, so I will have to deposit by 10th of next month. 10th of next month, and I have to file my GSTR 7, which is called TDS deductor return, by 10th of next month, and I have to issue a TDS certificate to my deductee on whose account TDS is being deducted by 15th of next month. So if I am deducting 2% while making payment to you, or payment is being credited to you, then this amount get once deposited, then it is going to be reflected in your e-cash ledger. Now you can use this credit e-cash ledger for discharging your output tax liability. This is what the broader scenario. Question could be, am I supposed to take TDS deductor registration? Answer is yes, whether or not you are separately registered. You can take TDS deductor registration if you are having your PAN number. If you are not having PAN number, then on the basis of TAN number, income tax. Second, on what value this GST, TDS need to be deducted? On value excluding CGST, SGST, UTGST, IGST and compensation cess. Sometimes this query comes as we have to deduct TDS under Income Tax Act. Let's say 100 rupees is the value and 5 rupees GST levied by supplier. Let's assume. I'm a deductor. I need to deduct TDS under IT Act, Income Tax Act, under GST Act. Tell me what would be the value for deduction of TDS under GST? 100 rupees. Not the GST. Under Income Tax Act, again you can exclude the taxes for deduction of income tax TDS. Clear? On 100 rupees. Having said that, now TDS certificate need to be issued by 15th of next month, and provision prescribed that if you don't do, then there is interest implication and penalty provision. Some of the question which I am getting more in TDS, if unregistered supplier supplying to specified person who are deductor, whether TDS need to be deducted? Answer is no. If it is reverse charge liability, TDS need to be deducted? Answer is no. So government has created FAQ, and we have also given this document to all of you, so that you can really prepare yourself for TDS related provision. Coming to TCS, tax collection, applicable from 1st October to who could be TCS, tax collection at source. First, let's say I'm an e-commerce operator, Amazon or Flipkart. There are not many suppliers who are supplying taxable goods or services through my web-based platform. So what happens if you're a customer, you're coming to Amazon site, you're identifying goods, placing an order, making payment to my Amazon, then I'm placing, I'm shipping that order. I'm not placing any order, I'm shipping that order to the respective supplier, and respective supplier supplies goods directly to you, raising invoice directly to you, but they don't collect any payment. Payment is collected by this e-commerce operator. This is the condition for TCS. In what situation TCS is going to be applicable? Let's listen. This provision is there so that you can really look at this provision. Every e-commerce operator, please listen, there are 4 lines but very interesting. When TCS applicable, who is required to collect TCS? Every e-commerce operator, not being an agent, shall collect TCS at prescribed rate. And what is the prescribed rate? Not exceeding 1%. So it is only 1%. For intrastate, 0.5 CGST, 0.5 SGST. For interstate, 1% IGST. When taxable supplies are made through this e-commerce operator, by other supplier, and the consideration, this is very important, consideration with respect to such supplies is to be collected by such e-commerce operator. If you directly make payment to the supplier, then that provision is not chargeable to TCS. TCS provision is applicable only when you are making payment to this e-commerce operator, and then this e-commerce operator is releasing the payment to the supplier. When he is releasing the payment to the supplier, he is bound to collect TCS at the rate of 1%, 0.5 for intra, CGST and SGST, and 1% for IGST for releasing this payment to supplier. So what happened? Whatever TCS collected, again I need to deposit by 10th of next month. I need to file my GSTR 8 return, and then the one annual return prescribed 9B to be filed by TCS operator. Now this need to be deposited to the government exchequer, and once deposited, then supplier e-cash ledger getting credited with the amount of TCS collected and deposited by the operator. So such supplier can use this e-cash ledger balance for discharging their output tax liability. This is what the provision. And here there's nothing like government, non-government, any e-commerce operator, maybe private, maybe public, if they are supplying goods and services, because goods and services of third party supplier are being publicized on their website, and then you are placing the order on those website, and while placing order you are making payment to such operator, and then the shipping and order and the invoice raised by such supplier directly to the customer. This is what the brief provision pertaining to TCS. And again, TCS need to be deposited by 10th of next month, getting credited in e-cash ledger of supplier. Supplier can use this balance for discharging their output tax liability or provision. Non-compliances for not making payment, not depositing on time is always there, which you may run through with this documentation provided to you. So I'm through with TDS and TCS provision. Rest is GSTR 9 and 9C, for which I have said we will do something in November. Let me take few questions which I got today. We are running now sort of, we extended our time period. So I will take 5-6 questions which has already come to me, and important also. Some Mr. B. Prashant Rao, he has posted a query. Is there any option to claim ITC for non-exporter? Mr. Prashant, and to all of you, you can always avail ITC, but the question is, can you get refund? Can you get refund if you are not exporting? Refund is permissible only for zero rated. So if I divide your question would be, you can always avail credit provided you are supplying taxable goods or services. So availing credit. Now after availing credit, question comes, can I get refund? Refund is permissible only in two options. First, your supply must be zero rated, under section 16 of IGST Act. What is zero rated? Export and supplies to SEZ, unit or developer. And second option, inverted duty structure. Then refund is permissible. What is inverted duty structure? My outward is at a lower rate, but inward is at a higher rate. Then refund is permissible. So this is the answer for you to understand. Next one is asking GST annual return and finalization of ITC input, etc. There is no query in your observation. Maybe you're looking that how to file GST annual return. So maybe wait and watch. You must have seen one video which we have uploaded, and maybe that would be available on CA Club India as well. That there are challenges on filing GSTR 9, and there are article also written on GSTR annual return. And recently this article made the part of course content as well. Kindly run that for your preparation. Coming to the next query by Anil Kumar. What is the GST liability in case of legal firm? Legal firm, no GST liability because reverse charge applicable. But only problem is that reverse charge applicable, you please make sure that if you're exclusively for supply is under reverse charge, no liability, no registration. Only recipient has to discharge the liability. Unless otherwise, there's some other services which is not falling into legal services, then the implication may come. So you are doing a renting of immovable property by legal firm. Whether reverse charge applicable? No, then forward charge. So you have to understand from that perspective. Coming to the next question, what if vendor do not file GSTR 1 till 31st October? We have valid invoice of vendor for claiming ITC, Mr. Nikhil Agarwal. Have touch base. कुछ नहीं हो सकता. Nothing possible. If your supplier has not uploaded the invoice, credit would be denied in your hands. Go back to those supplier. Make sure that they file their GSTR 1. If not, another way would be you may debit such amount from their future invoices. If he is a regular supplier. If he is not a regular supplier, then you are left out with civil liability, civil suit against them. Please go back and chase them hard. Next. Query. Whether a person renting a car can take credit of motor car. Yes, you can definitely take, no denial to it, because it is being used for the further supply. Credit would be available. Having said that, there are not many queries before me, but I'm very sorry. We said for 2 hours and with no, interval, no kind of rest. And last 2 hours, 15 minutes, spontaneously I'm speaking one-sided.
Would you want to take few queries from?
There are few queries.
There are some.
So Praveen is saying that take few queries. So, okay, let me take some few queries.
There are, our students are there.
So, Praveen is posting query from student perspective, leaving it to him to let him ask. I will respond back.
Alright. So, I believe a lot of our students were quite active. And thank you, Manish. Thank you, Pradeep, Rahul, and Hiren was there, Siva. Thank you, all of you. Alright. So, Manish has asked. So what happens when company has changed its registered office from one state to another? How old input credit will be carried or availed under the new GST number?
Possible, dear, what happened when you have changed your office, then you are moving from one state to another state. It would be transfer of business from one registration to another registration. Follow a route of section 18 where transfer of credit is permissible provided whole business from one state to another state is being transferred.
Alright, so we have again, suppose if a company purchases a car having 5-seat capacity for management traveling, can we take credit?
No, not possible.
Alright, a person providing a car on rent can take credit on car. Hiren probably have answered. Is ITC available for purchase of capital goods?
Of course, credit is available, that 100% credit provided used for taxable supply. If exempted, then the reversal of rule 42 and 43 will come into the picture.
Alright. So yeah, that's it. I believe. Thank you all of you. Thank you, Bimal sir. It was amazing. It was quite interactive, and I believe that you guys must have got a lot of coverage, and which you need to cover up. You go home again. We'll be sharing this video. We'll be adding this video to our existing lecture. You again can rewatch it, and obviously make your notes, and we will be coming back to you again. So your message.
Thank you very much. I will only look forward. Don't say. Keep one word in your mind. Amendment comes from both sides. It never comes from one side. When you say there is no amendment, no updated, I really feel sorry for that, because if you go back to the content which we are posting on CA Club India, those are really updated amendment provided to you. You have to only walk along with Bimal Jain. If you really walk along with Bimal Jain, rest assured amendment will come to your way, because that's what I'm saying, sabka saath, sabka vikas. But rest assured, having said that, I will always be next to you. Next to you, I'm repeating again, to make sure that this travel of GST, we started with good and simple tax, we will remain and make it GST good and simple. We'll try to incorporate some more videos as and when required to make it. This is the best GST certification course available as on date pan India. That would be our that is our desire, and we want it to be. And with your love and affection, I'm sure we will succeed in our endeavors to make GST good and simple tax. Thanks for watching this webinar, and let's be in touch. Thank you very much.